and welcome to Your Stocks in the Mumbai studio. I'm Ekta Batra. Well, it is turning out to be a day which is very quiet for the indices. So we have the Nifty, which is just about flat at this point in time. It's been choppy, but in a tight range. We have the mid-cap index, which is managing to hold up in the green, so up around 0.5%. The advanced decline ratio has just about been on the advancing side. So let's see whether that sustains. There's been a little bit of worsening from the top for the advanced decline ratio. The Bank Nifty, that's the point of pressure, so down around 0.5% currently for the Bank Nifty. Well, joining us this afternoon, we have Rajat Bose to talk about the technicals of the market, and Sharad Avasthi, who's the head of PCG research at SMIFS, who's with us this afternoon. Sharad as well as Rajat, welcome to the show. Well, as always, we always have a hygiene check before we start off the show. So Rajat, I'm going to toss it over to you. Markets are flat, mid-caps are gaining, Bank Nifty is under pressure. What's your approach today?
Well, to talk about the Nifty, I would say that Nifty, whatever you are noticing now, is a kind of a pullback rally, and this pullback rally is likely to come to an end when it goes to, say, 22,400 to about 22,450. Only if you see that the Nifty is sustaining above 22,500, then you can expect some kind of a short-term uptrend to begin. Otherwise, what is happening now is just a pullback after a fall. And regarding the Bank Nifty, which is even weaker, I would say that it needs to sustain above 48,400 to about 48,700. Only then you will see some traction coming into Bank Nifty. And what I have noticed is that this is a time when you are getting a pullback rally. It would be better that you either book profits or reduce your exposure. That would be a much better thing, because going forward there would be further fall, and that fall might breach the recent low.
Okay, all right. Well, let's get in some queries now. We have the first question coming in from Siddharth Gupta, who's joining in on the line from New Delhi. He has a query. He has investments in Lupin. Hi, Siddharth.
Yeah, hi. Hi, everyone.
Hi, tell us.
Okay, so yesterday I bought 200 shares of Lupin at the price of 1684. I mean, that was the highest it reached yesterday. And unfortunately, I was the one purchasing at that moment. And then it had a very drastic fall yesterday. So I took the delivery of the 200 shares.
Okay.
So my question is what should I do? Now I have taken the delivery, so I should hold it or just book the loss?
Okay. All right. What's your time horizon?
No, I took it for intraday.
Okay. Okay.
Yeah.
Okay. All right. And would you probably look at investing it on a longer term basis, reinvesting or re-entering the stock?
My portfolio,
from
I'm
a long
managing the portfolio. Not a long
from a long
thing. No.
Okay. All right. All right. Rajat, over to you on this one. What would you recommend to Siddharth?
What is the stock?
Lupin.
Lupin.
He bought it at 1685, I think, yesterday. Yeah.
Well, I would say that from a weekly chart point of view, from a daily chart point of view, Lupin is looking weak. I would say that it would be better if minor losses are booked and one gets out of this position, because this minor rally that you are noticing now is again a pullback. I would say that when Lupin failed yesterday, there had been huge selling, huge volume it encountered, and compared to that, the volume today is far less. So this rally should not be trusted. Now the loss may be smaller, so one should get out of it.
Okay, all right, fair enough. So you're saying that one should book their losses when it comes to Lupin. And just a quick fundamental view, Siddharth is not a long-term investor, but Sharad just wanted your view on Lupin, considering that it did come out with its numbers and it's been in focus on account of that.
Yeah, I think the quarterly numbers were not very exciting, but considering the type of response the Spiriva launch has received in the US, I think the forward numbers could look much better. They have a very aggressive pipeline in the US as well. So we are expecting, FY26, they could report somewhere around 80-81 rupees as earnings. So based on that, I think 30 times would not be very difficult for Lupin. So if you have a long-term view, I think you can continue to hold for targets of around 2400 on the stock.
Okay, all right. Well, now let's get to Namrata, who writes to us from Nasik. She holds 59 shares, which she's bought of IOC at the rate of 170 rupees per share. So she's sitting on a loss. She wants to know what to do, whether to hold or to book her losses. Again, a similar question here. So Rajat, over to you on this one.
Ekta, if giving a sell call is a disappointment, then I can't help it. Even Indian oil, I would say that it would be better that one exits the position, because after a very sharp rise where Indian oil went up to something like 200 early part of this year, then there was a fall which took it to something like 150 or so. And this was a pullback, and the pullback is already through and it has started coming down. So my reasoning is that probably going forward, you will get it at a lower price. So it would be better if you get out of this counter.
Okay, all right, got it. So you'd, recommend exiting from IOC as well. Any view fundamentally on that one? Sharad, over to you.
Yeah, I think what Rajat is saying in the medium to short term, even in the longer term, I think 1.5 year, we don't see much upside happening. The earnings over the next 2 years could be around 17 to 19 rupees. There is a lot of hype and hoopla around what would happen to refining margins and Russian crude kicking in. But I think gradually those differences peter out over a period of time. And I don't think that there will be a lot of improvement in the refining margins. But the good thing for IOC is that if you can extend your horizon to beyond 2 years, I think that is when you could make some money out of it. Because there is a huge capex that these companies are doing. The current capacities are what, roughly 81 mmtpa, and they are expanding another 41 mmtpa. So once that starts kicking in, I think that could be positive for them. A lot of new generation energy projects are also being undertaken by them in a JV with NTPC. So I think those are very long-term potentials. But yes, if you even in a 1.5, 2 year kind of horizon, I don't think if it even trades, let's say 10 times, then 170, 180 is the fair value. So I don't think it makes sense to stay put in this one.
Okay, well, those are the Balaji Amines numbers looking very good on the screen. The revenue is down around 12.2% year on year, but it is a profit which is exceeded. And if you look at last quarter's numbers, the profit was down 33% on a year-on-year basis, but sequentially there was a recovery. This time round, there is a year-on-year recovery which has taken place in terms of the profitability, which is up over 40% on a year-on-year basis. As you can see, Balaji Amines is reacting very positively to those set of numbers. The stock has spiked up around 14% at this point. It'll be interesting to see what the Q-on-Q performance is as well for Balaji Amines, considering that last quarter there was that sequential improvement which had taken place. So let's see whether that comes through or not this time round. But overall, on a year-on-year basis, what stands out as of now is the profitability. The EBITDA also up around 5% on a year-on-year basis. Last quarter, the EBITDA was up around 38% sequentially, but was down 42% year-on-year. So this time round, what stands out is that there is a year-on-year improvement which has taken place both on the EBITDA as well as the profitability. The revenue, however, has declined, but its decline is lesser as compared to what we had seen in the previous quarter. So those are prima facie the numbers coming out from Balaji Amines. The stock is up around 12%. Sharad, do you look at the stock?
Yeah, I've been looking at it for quite some time now, but it seems to be falling every day. But I think it's a very good long-term story. I think it's a time it has leadership position in some of the businesses that it has done. And I've been tracking it for quite some time. It used to trade somewhere around $30, I believe, way back. But now I think the fresh triggers could be that most probably the cycle is bottoming out, and there is a possibility that the capex starts playing out in their favor. And this quarter's numbers are also probably much better than expected. So I think the forward commentary should also improve. So second half of the year, I'm expecting most chemical companies to report much better numbers and much better outlook as well. So that should help companies like Balaji Amines as well. it is one of the top bets that I'm picking on, but let's see how it pans out.
Okay, yes, absolutely. Well, given the circumstances in what we are seeing in the chemical space, definitely a good set of numbers. But just a quick word, Rajat, on the technicals, considering that there's some way off from the 52-week high, which was around 2,736 for Balaji Amines. Do you think technically it has that strength to go all the way?
It can actually, it is showing some traction, and this is one stock that one can buy even from a technical point of view, because most of the weekly moving averages have been taken out on the upside, and it is moving up. It is a pullback rally, but the pullback rally has got legs, and it can move up to something like 2550 to about 2700. So at current prices, one can buy Balaji Amines.
Okay, all right. Well, we have Shubham now, who writes to us from Mumbai. He holds 4 shares of NTPC, which is bought at around 350 rupees per share. He wants to know what to do, whether to hold or to stay invested. So he's bought 4 shares at 362 odd rupees. He's just about sitting on a marginal loss. Sharad, over to you on NTPC fundamentals.
Yeah, I think number-wise, it's roughly fairly to fully valued. The current capacities are somewhere around 75.7 gigawatts. They are looking at expanding it to 130 gigawatts. But if you look at the price to book and the price to earning multiple, FY26, we are expecting about 25 rupee kind of earnings. Even if it gets a 15 kind of multiple, I think the fair value comes to around 375. So I don't think there's much upside in the stock from these levels. So unless and until you have a very longer horizon where you can wait for, say, 3 to 5 years or more, then it makes sense to stay put in these ideas. But at these valuations, I think most of the positives are roughly priced in, even the renewable energy arm being listed separately. I think all that is roughly priced in. So I don't think there's much upside from here on.
Okay, you don't find much upside from here on. And technically, how would you approach NTPC? Rajat?
It has been on a tear, and it has actually moved up. NTPC has moved up considerably. But now during 2024, the 14-week RSI is giving negative divergence. Negative divergence means that its momentum is slowly diminishing, and it can come down. That's why I would say put a stop loss below 330 and carry on with it so long as it moves up fine, but keep a strict stop loss at 330.
Okay, strict stop loss at 330 odd rupees. That's the word coming in on the technicals of NTPC. Well, we have MV Raju, who writes to us from Tamil Nadu, who holds 50 shares of GM Fodler, which is bought at an average cost of 1670. So he's sitting on a loss there. He wants to know what to do, whether he should hold or book his losses. Well, interesting, Rajat. This is the third query where we've got somebody who's sitting on a loss and is asking a similar question. It might just be indicative of what's been taking place. People are buying at the peak, possibly. But what would you recommend, Rajat, at this point on GMM Fodler?
If you look at the daily chart, then you will have some kind of an optimism developing in your mind. But when you look at a bigger perspective and go to the weekly chart, it will show that a long distribution process is coming to an end, and now it is actually, it went down below the 200-week moving average, and again it is breaching the 200-week exponential moving average for the second time in quick succession. This means that the pullback rally is over. If I were in the investor's shoes, I would have definitely exited this.
Okay. And what about you, Sharad?
Yeah, I think you should continue to hold on. The glass lining maker business is the primary business for them. They are also diversifying into the non-glass liner business. Largely, the business should move in sync with the capex in the economy. And they have improved. They have entered into Germany, etc., and some other areas that should also do very well for them. Last 3-4 years, they've done some 6-7 acquisitions also. That should also bode well for them. I think there is a possibility that they could continue to grow at 20-25% CAGR. Even the company has guided for that kind of growth. I think the euro appreciation has also affected them a bit. But now I don't think in the long term there would be two challenges that most glass lining companies have been facing. Firstly, there was no demand. Now the demand from the capex side is there, so they should be in a sweet spot. And beyond this, I think even the currency, Indian currency particularly, should largely be on an appreciating mode in the long term, even to medium to long term. So that should also help them. And the raw material pressure should not be there because a large part of the equipment making is dependent on metal prices and all that. So I think the pressure from there will also not be there. So I think demand side is there, raw material push, raw material cost pressure is not there. And even the third aspect of currency because of international exposure that these companies have. So I think even if it trades at 25 to 30 times roughly, so you could hold on for a target of somewhere around 1800 on GMM for that.
Okay, all right. Well, we do have some news on Cipla where they've been issued a Form 483 with one inspectional observation which has come through, and it was from the 28th of April to the 8th of May. So that stock is in focus. One inspectional observation is not much. So I don't think it should have, it should probably see too much of an issue there. Well, we'll take a quick break. We'll answer more queries on the other side. Stay tuned. Welcome back. You're still tuned into your stocks. We still have with us Rajat, Bose and Sharad Avasthi to answer all of your stock queries. Well, let's get in another query now. We have Krishan Kumar who writes to us from Haryana. He holds 95 shares of Asa DM Healthcare, which he's bought at a price of around 480 odd rupees. He wants to know about the future of the stock for the next 3 to 6 months. Well, Sharad, over to you on this one. Asa DM, the future in the next 3 to 6 months might be quite different for them, considering that now they are a completely India-focused player and they do have some amount of cash on books post the dividend payout as well. What would you recommend?
I think the broader story has already played out here. If you look at the valuations now, the India business roughly is being valued fairly at whatever the valuation they were supposed to get. And I believe the gentleman would have received the dividend also. So ex-dividend, I think if the India business is to grow, it will depend on a lot of traction as to what they do with the surplus money and how the new expansions they do gain traction. So I think in terms of valuation, it is roughly fairly to fully valued. I don't see much upside happening in the short to medium term. Maybe in the long term, when the India business doubles up, I think that could be some growth prospect. But in the short to medium term, I don't think there is much left for this company to grow. I think it would be better if you suggest to something like a Yatharth Hospital. They are doubling their presence. So I think that should be a good investment. And they are in a catchment area where, the average rates are also much better. And the demand is also strong. It is the second largest within that region of North India. So I think Yatharth Hospital could be a good bet. I think valuations are also attractive. Even if it trades at 18-20 times, you could be looking at somewhere around 600, 650 on the stock. So compared to this, I think it's better to switch to Yatharth Hospital.
Okay, all right. Switch to Yatharth Hospital is what you recommend. And on the technicals, Rajat, what would your view be on Asa DM?
Technicals have actually deteriorated it is very difficult to describe it because there is a 100-point gap between 22nd and 23rd April. And after that, it is now trying to form a base around 330, 350 range. But all you can expect is a pullback rally that might take it up to something like 380 to 400. But then it will fall again because all indicators from a technical point of view are suggesting that there would be further downside left in this stock. So no bargain hunting here.
Okay, all right. Well, we now have Rajiv Kumar who writes to us from New Delhi. He holds 30 shares of Yes Bank, which he's bought at around 20 odd rupees. So he's sitting on a marginal profit there. He wants to know what to do, whether it is advisable to hold these shares for a longer period of time. Well, Sharad, profit looked good this quarter for Yes Bank. It doubled. It was aided by the non-interest income. But nonetheless, do you expect this kind of profitability to sustain into FY25? How would you rank Yes Bank?
Yeah, in terms of sustainability of profitability, I do not doubt. The GNPA numbers have been continuously coming down. The NNPAs have come below 1% now. Growth is decent. But in terms of valuation, I think FY25, you are expecting a book value of somewhere around 15 rupees. FY26, maybe it goes up by another rupee or a 1 rupee 25 paisa. So you could look at 15, 16 rupees kind of earnings. So based on that, I think the valuation it trades at roughly discounts it at, 1.5 kind of valuation. So which is roughly fairly to fully valued. I don't see much upside based on that. But if you can hold on for a bit longer, I think if this takeover thing does happen, if you want to take that risk, if this sale thing happens, I think then that could be at a substantial premium to current prices that could offer some fillip to prices. And then how the whole mathematics pans out, I think that is something I would like to see. But that is one trigger that could help Yes Bank. But by traditional matrices, if the acquisition is not to happen or a transfer of stake is not to happen, I don't think there is much upside. But if that transfer happens, I think that should substantially, ideally happen at something around at a price to book multiple of 3 and above. So then you could probably be looking at, something about 40, 45 on the stock. But otherwise, I think normally if the normal business is to continue, I think these are fair valuations.
Okay, all right. And a quick technical check before we wrap up, Rajat, on Yes Bank.
See, Yes Bank first in February, 32.85 high. Then there was a low of 20.50. And after that, we saw a high of 28.55. And again, it is coming down. All you can do is, if you have hope, then carry on still 20.50. If 20.50 is taken down, then you should exit. It may not fall below 20.50, but do not expect any great upside. It won't be able to take out 28 in the near term.
Okay, all right, Rajat, as well as Sharad, we're going to wrap up on that note. It's always a pleasure listening into your views. That's all the time that we have on this show. Do remember to email us your queries and we'll address them with our experts. Stay tuned, closing bell to take you through the last hour of trade just after a short break.